Did you know that the gig economy is not just gig workers, but actually entrepreneurs? Let's talk about it. Hello, everybody. Joe Warper coming at you. And just this week, I was talking to a potential client, and his wife is a gig worker, meaning she has a job where she works for somebody else delivering groceries, or it could be Uber, it could be Lyft, whatever it could be. But she thinks of herself as kind of an employee of these companies. But in reality, if you are a member of the gig economy, and that means you're not working for somebody, but you're doing jobs for multiple companies, you're not an employee. You're not an employee of Uber, you're not an employee of Lyft. If you're a personal shopper, you're not an employee of those companies because they're cutting you a 1099. That means you're an entrepreneur. And you need to think of yourself as an entrepreneur, and you need to take advantage of the tax breaks afforded to entrepreneurs. So, if you work for Uber, if you work for Lyft, if you get a 1099, that means that you are a business owner. And as a business owner, you probably should file your taxes differently. What I mean by this is currently you're more than likely a sole proprietor, which is the default action that the IRS will take with you if you file as a business owner. But a sole proprietor gives you the least amount of tax breaks possible. Now, this does depend on the level of revenue that you're collecting. If you're making $15,000, $20,000, $30,000 a year, I wouldn't bother with this. But if you're making real money, $60,000, $70,000, $80,000, maybe $100,000 a year, you should be filing maybe as an S-Corporation because you are an entrepreneur. You don't work for those companies. They give you a 1099 and you can get some massive tax benefits if you file the correct structure as your business. The other thing you have to think about is filing an LLC. Now, what an LLC is, a limited liability company. What this will do is this will protect you in case you make a mistake while operating as a driver or while operating as a shopper. You don't want somebody to sue you and be able to come into your personal assets. That's why it's important that you file an LLC. And an LLC, like I said, is a limited liability company, and this will protect your business assets from your personal assets so no one can sue you and take those personal assets away. Now, why would you want to file as an S-Corporation on top of that? Because LLC is not a tax status. LLC is simply a liability status. So you may want to look at filing as an S-Corporation because then you can bifurcate your income. So let's say you make $80,000 a year driving for Lyft, delivering food, shopping for people. You can separate that income and you can pay yourself a W-2 for a portion of that $80,000, and then you can take the rest out as a draw. And money taken as a draw are not subject to FICA. So that's about a 15% tax savings. So let's just say that you make $80,000 a year. You pay yourself $30,000 salary. That means the $30,000 will be subject to the FICA, but the $50,000 difference will come out as a draw, and you will not pay FICA taxes on that $50,000, which at 15%, that's a $7,500 tax savings. So right there, I just saved you money. Now, on top of this, you can also, because you're a self-employed individual, you can have your own retirement account. You could have a SEP, a simplified employee pension plan, which would allow you to put money away pre-tax, or a SEP Roth. You could do a simple 401k, which would allow you to save thousands of dollars a year tax-free as a simple Roth 401k. So there are some great opportunities out there that you're missing if you consider yourself a gig economist, a gig employee. You're not. You're an entrepreneur. You need to own that. That is awesome. You're working for yourself, but you should get those tax benefits as well. You should get that LLC filed. You should talk to an accountant or a financial advisor to pick the proper tax status for your company, and you should begin to save for retirement with either a simplified employee pension plan, a simple 401k. The nice thing about those retirement accounts, there's no cost to set them up. You simply open up an account and you have a SEP, a simplified employee pension plan, which allows you to save up to 25% of your revenue into either a Roth or a pre-tax account. And if you know me, you know I love the Roth. Or you could do a simple 401k, which I believe the max is $16,000 a year, but I'll check that and put that up on the screen right here. So go talk to an accountant, go talk to an advisor if you are working for Uber or for Lyft, because you could be saving thousands in taxes, you could be getting an LLC to protect yourself against liability, and you could be saving in a retirement plan. If you like videos like this, make sure you subscribe for future videos, turn that notification bell on so YouTube tells you when I come out with a new video, And leave a comment down below for ideas for future videos. And as always, I'll see you next time.